We start, though, with the morning brief, where we continue to be on inflation watch. And Miles Udland has been watching all the numbers and the various components of inflation. And Miles, as you wrote about this morning, there's one area where we're seeing some easing. What I have found remarkable as we watch this inflation data is, over the course of my career covering financial markets, I can't remember a time where I was so personally affected by some of the bigger things that we were seeing in the economy. As you wrote about, what you wrote about this morning, I was buying this very thing yesterday. And as we know, there's also been a real estate tie-in this year as we've been watching those housing prices go up.
Well, that's a great anecdote, Julie, which it's like a secondary part of the inflation conversation that I think, I think our former shared colleague, Joe Weisenthal, has talked about inflation this way, where inflation is when the price of something I want to buy goes up, therefore I declare that there is inflation. And there is a lot of that going on right now in the conversation. But the way that we looked at the morning brief today was based on yesterday's report out of Mannheim, which of course runs used car dealerships and prints the used car vehicle index, or used vehicle value index, excuse me, you see here. And you can see that obviously the price of used cars has gone bananas over the last year. But what this chart also shows, that little sort of that double tick, maybe you can see it perhaps that way on the top of the chart, is that from May to June, the price of used cars actually fell. Now, it fell 1%, but the conversation that we've been having all week and really over the last few months, and I know that we're going to continue having as we get through the second half of this year, and we perhaps see this dynamic play out in other areas of the market, other areas of the economy, rather, that have been leading inflation, is that when prices stop going up, these inflation readings stop coming in so red hot. So yes, compared to last year, price of used cars up 34%. Well, the big dip on that chart is this time last year as we were coming out of the depths of the recession. Used cars obviously fell to multi-year lows in April and May, and they rebounded quickly, but we were still, below prevailing pre-pandemic pricing on vehicles. And so the base effects in this part of the economy and in many other areas. Think about hotel, the cost of a hotel room, airline fares, rental cars. These things were not in high demand last year. The price of these services was lower last year. And so the increase in demand that we've seen this year, in addition to this stuff being available, has led to a huge base effect increase in the price. And so then you need to look at, okay, well, we've seen that drive inflation higher. What's going to continue it? What would continue to drive inflation higher? And that's a continued increase and a sequential basis, month on month on month, all this stuff getting more and more and more expensive. And what the used car market is telling us is that's not happening. And the rental car market says the same thing. It's not likely that these prices will go up in perpetuity. There is a limit to, at which these things will stop going up in price. And I think, we're tracking this data this way because when we're sitting here in September and we're talking about inflation perhaps being up, 1 point some odd percent over last year, whatever that number comes out to, if it's more like a 2% type number, I don't want to have to sit here, and even though I'm going to have to, I don't have to sit here and talk about, is there going to be deflation now in the economy? No. Inflation is capturing the rate of change in the overall price level. The rate of change has accelerated, and a number of key categories, used cars among them, the rate of change has stopped accelerating. Therefore, the rate of inflation is going to slow down in the months ahead. And I think we continue to outline this story. We can all see it coming from a mile away, and, buckle up.
Yeah, right, Miles. And you can see on the side, we were showing some stock prices of used car dealerships. Carvana, its stock is up 131% over the past year. Now, we've talked to CEO Arnie Garcia a lot, and he said, sales have been through the roof, essentially because they're seeing a lot of demand during the pandemic, but they're able to charge higher prices, Julie.
Yeah, and just something I want to remind folks about, the other dynamics that have been pushing those used car prices up, besides the sort of dip during the pandemic and then increase, and we've talked about this a lot, of course, And it has to do with the dynamics in the new car market, then spilling over into the used car market. That is, we all know that there's a chip shortage that's affecting the new automakers, right? The automakers who make new cars, and they're not able to make as many as there is demand for. Therefore, you've seen some of that demand spill over into the used car market, and there's a shortage of supply there as well, because they're just having trouble finding the used cars to be able to sell to meet that demand. So are we seeing the new car situation get alleviated? We've been hearing a little bit of commentary from the automakers that that is starting to happen, that they're starting to get more access to chips, and therefore maybe they can start to ramp that production up a little bit more. And then therefore, one would imagine you should see that ripple effect happening into the used car market as well. So we'll see, Miles, if that happens. Yeah.
Well, and also on that same point, and this was, look, the morning brief is not going to be a 1,500 word piece, but it's another part of that. The auctions from rental fleets into the used car market have slowed down considerably because the car rental outlets need the cars. So typically after, usually 20,000 miles, you sell the cars that you were renting into the used car market. Well, those sales aren't happening now because there's so much demand for said rental cars. And so that, in addition to the chip shortage, in addition to supply chain problems, in addition to demand, all of these factors have conspired to push up used car prices. And I think we can all agree that's not going to happen indefinitely.
Yeah, that is a great point. One of those other inputs.